Good morning, class. Thank you very much for your time. Thank you very much for your text messages. So, I will continue from my last videos. So, today I will continue with insurance claim and consequential loss. So, in my last class, I've sent a format, I've sent the steps, and I've prepared a video on how you can calculate uh, turnover loss. So, and I promised you in the last class that in the next video I will upload, I will teach you how to calculate turnover loss by using what? Figures. So, let's look at this illustration. This is a standard examination question. Jide Enterprises has a consequential loss insurance policy of 200,000 with a 6-month period of indemnity. Remember, in my first video, I gave you 6 to 7 steps. One of the steps, step 1 is what? You identify the period of indemnity. So I'll come to this side. The period of indemnity, 6 months. If you recall, in my previous videos, I explained that period of indemnity that is going to be given in the introduction of the question. Now look at it now. For 6 months, so it is given here, which is for 6 months. Improvement of 1/10. You know, I said it that it might give you in fraction or in percentage. This one is given in fraction, which is the same as what? 0.1. Take note. On both gross profit percentage and turnover for the purpose of the claim. Do you see it now? Now, these are the financial statements. 31 December 2001, they gave us this is a company account, turnover, insurance standing charge, uninsured standing charge, the net profit. Do you see it now? Now, let's look at the additional information. The turnover for each month of August and September were 100,000. They are referring to this turnover as 1 million. So that means this one is January to December of 1 million. So we are told that out of the 1 million, 100,000 is for August, 100,000 is for September. Take note of that. While the turnover for the rest of the year they are equal. So if you have 12 months in a year, 100,000 for August, 100,000 for September. So the balance 800,000 will be for 10 months. So you divide it by 10. That will give us 80,000 naira each month, which is this 1 million. So I will take 200,000 from 1 million. I have 800,000. The remaining 10 months, I will divide it equally. So that means go to about 80,000 each month. Take note on get there. Then the turnover for the 3 months to 31 December amounted to 640,000 naira. So this is turnover for 2002. Remember I told you in my first video, we need just 2 turnover in the period of before the period of disruption and in the period of disruption, but it will be spread. So let's go to the next one. On 1st April 2002, fire occurred in the factory and disrupted the normal activities till 31 July 2002. What are they trying to say? That is known as what? Which is step 2. Period of incident or period of disruption. So, period of incident. Which is 1/4/2002 to 31/8/2002. You see it now. April, May, June, July, August. So, April 1st, April, May, June, okay, April to July, sorry. April to July. So, April, May, June, July. So, it's 4 good months. That is when the fire incident destroyed the business. So, let's move on. Then, during this period, the turnover of each month amounted to what? 28,100. What is the turnover of each month? They are talking about the turnover in the period of destruction. That is what? The actual turnover. Take note, it is 4 months. So they give us 28,100 each month. So it's going to be times 4. So when we get there, we are going to apply it. Let's move on. Then, during the period of destruction, the amount spent to maintain revenue at highest level was 30% of insurance standing charges. So here they are talking about working capital management. So when we get there, I will explain, but that will be my next video. So this video, I want to teach you how to calculate turnover loss. Then the amount made turnover to be improved by 60,000. At the end of the period of the structure, a savings equal to 25% of the insurance standing charge was made. You are required to calculate the consequential loss claim for the firm. Good. This is a standard question, but I won't deal with all of them. I will take the turnover loss first. Then my next video, make sure you subscribe to this so that you be notified once I drop the new video. So my next video will be for the consequential loss on the claim. So let's go to turnover loss. Now step 3, we have to calculate what? The GP percentage, which is what? The net profit plus insured standing charge all over turnover times 100. So what am I doing? I'm not doing anything different. I will go to my financial statement. My net profit is 60,000. I'll pick 60,000 here. What is my insurance standing charge? Which is 60,000 also. What is my turnover? This is my turnover, 1 million. Times 100. This will now give me 120,000 divided by 1 million times 100. So let me take my calculator. So I have 120,000 divided by 1 million. So that will give me 12%. Do you see it now? 12%. What is the next step? I will add my improvement. My improvement is 0.1. So 0.1 is the same thing as 1 over 10. So 0.1, which is what? The same thing as 1% and 10%. So that will give me 10% of this. So 0.1 times 12. This will give me 1.2. Do you get it now? So improvement 0.1 times 12. 0.1 times 12. That will give me 1.2. So 1.2 plus 12. This will give me 13.2%. So this is my GP percentage now. 13.2%. Now what is the next step in the question? I have to look for what? My turnover before the period of disruption. Now look at my turnover now. Remember, fire occurred 1402 to 31702. So that means my corresponding turnover for that period of disruption is 1401 to 31701. Take note. So that means out of this turnover that we have January to December. So the turnover that I need now that corresponds with this period is 1401 to 31701. So we have April, May, June, July. 4 good months. And remember, out of these 4 months now, August and September is 200,000 is out. So we now have 800,000 remaining. So the 800,000 will be spread equally. So that means each month will be what? 80,000, 80,000. So my corresponding turnover will now be 80,000 times 4. So that will give me 320,000 naira. Do you see it now? 320,000. Let me take it. How did I get 320? This is 1 million given. Out of 1 million, 100,000 is for August and September, which is 200,000. So I will remove it from there. I have 800. Then they say the balance turnover should be spread equally. So 800,000 divided by 10, that will give us 80,000. So I only need 4 more that correspond. So I'll now say, okay, add improvements. My improvement is 10%. So 10% of 320,000. So this will give me 32,000. So once I add it back, plus 320, so this will give me 352,000 naira. Now, what is my actual turnover? Remember, my actual turnover, it is the turnover in the period of disruption. Fire occur 1402 to 31702. Let's look at it again. Now, we are told that the turnover for the 3 months to 31st March were 640,000. On 4th April 2002, fire occurred in the factory and disrupted normal activities until 31st July 2002. During this period, look at it, the turnover of each month amounted to 28,100. So it is 4 months. I'll say the 28,100 times 4. That will give us 112,400. 112,400. So this is 28,100 times 4. So I will minus it from here. Minus 352,123. So that gives me 239,600. So this is my turnover loss. So my turnover loss is 239,600. You see now. Now let's get my GP percentage now. My gross profit loss. GP loss, I will now look at it 13.2 times 239,600. 13.2 times 239,600. So 13.2%, 13.2 times 239,600. So that will give me 31,627. So this is my GP percentage. You see it now. At this point, I'm going to stop here. In my next video, I will continue with the same question. I will use it to solve till I get to what? The consequential loss claim. So please, if you are yet to subscribe, kindly subscribe to this video so that you'll be the first to notify once I drop a new video. Thank you very much and have a lovely weekend.